What's up, everybody? It's just another average stacker welcoming you to a second edition of JAAS Reports You Decide. And today we're going to talk about the gold to silver ratio, as I mentioned last week. And especially today, given the pop in precious metals prices over the last 2 days, I thought it would be very, very relevant today. And what we have here is a sample, a very close sample, it's not perfect, of the current silver to gold ratio with just under 90 to 1. And we have a 1/4 ounce of gold here, a nice little 1/4 ounce American Eagle, and 82 American Silver Eagles in front of us. And what I wanted to talk about is whether or not the silver to gold ratio is as relevant today as it was years ago. And back in the late 1700s, the American government set a fixed silver to gold ratio of 15 to 1. And over time, that changed. And after we went off of the gold standard and our money was no longer backed by gold, the silver to gold ratio didn't appear to have as much weight as it did prior to that. And over the years, we've seen it fluctuate from 30 to 1 to 60 to 1 to 90 to 1, back to 70 to 1, and it's been up and down and up and down. And what I'm really wondering is whether or not the fact that we're no longer on the gold standard and that the U.S. government doesn't treat these precious metals as currency, whether that plays an impact on how the gold to silver ratio applies today. And what we have seen is a widening in that ratio, and I think a lot of it has to do with the difference in the way that the general public views gold versus silver nowadays, and what drives the pricing of the two of those. And today's a perfect example. We saw gold jump, I don't know, $30 to $40 an ounce today. While silver was up, the percentage definitely wasn't as high. And the 90 to 1 ratio, how much of that is from an industrial aspect that silver is being looked at now versus a monetary aspect, compared to gold becoming the safe haven for everybody to run to when the Fed is starting to talk about interest rate cuts. We've got potential conflict with Iran right now, and we're on this economic bubble in the stock market. Excuse me. So we've got all these different factors that, yes, both of these did rise, but they're not rising equivalent. And with this 90 to 1 ratio, you would think that silver would react a little stronger at some point. We're at historic highs. That silver would start to grow faster in a percentage aspect than what gold does. So how much does the industrialization of silver play into the gold to silver ratio? We can't look at it anymore, and I think everybody can agree on this one, that the ratio of how it comes out of the ground, we can't look at anymore. It just doesn't apply physically the way that the markets, because of the fact that silver is used in industrial aspects where gold generally is not. So how much of that industrialization is keeping the prices down of silver when it comes to the gold to silver ratio? So just a quick little video today to make you think a little bit. Do we want to continue to buy gold even at these high gold to silver ratios? Or do we want to stick with silver because that silver to gold ratio is going to come back down, and silver is the better deal currently. Let me know what your thoughts are. Does the silver to gold ratio still carry the same weight today as it did 20 years ago? Or has industrialization thrown that out the window? Are you buying silver? Are you buying gold? Are you buying both? Let me know what you think. This is JAAS reporting for you to make that decision. Have a great evening, everybody.